Hey, good afternoon, everyone. I hope everyone is having a good weekend. So, first of all, right, try to understand that there is nothing like there is no strategy which works 100% of the time. There is no indicator or there is no alert service which works 100%. There can be always black swan events where suddenly Trump can tweet something. There can be sudden major news which can go any direction. That's why it is very important to have a consistent position size, right? We don't want to put all our money in one trade and expect that to make profits. So we should never use more than 3 to 4% of our portfolio in any one trade. So that even if we lose one trade, then the next 6 or 7 trades will make profits. So we can make 75 to 80%, but there is nothing like 100% success anywhere in the globe. So remember that the strategies which I am going to explain based on my experience, it is for your education purpose. It is not any financial advice. As I said, there is always such type of black swan events which can suddenly move the markets to any directions. There is always risk when you invest. So suddenly we put a lot of money, suddenly market goes suddenly any side. So that's why, right, always do your based on your portfolio, based on your risk appetite. Always do your research and you trade based on that. But these are the strategies which are working consistently for me. So I want to share these opportunities. So why this is a good time to take time to learn, practice these strategies? Most of you, right, if you are on green card or citizen, you may be in this country since last 20, 25 plus years. That means already you are more than 20, 25 years experience in your job. When you are about 20, 25 years, especially I know most of our Indian community are in IT sector or in some business sector. So when you are more than 25 plus years in a job, then the same job you'll be over experienced, so your salary or your consulting hour price will be too high. So the companies can always think to replace you with a low experienced, unless you are a VP, senior VP, senior director, you are very innovative, creative. Otherwise, if your job can be done by someone else, they will try to replace you. That is the major risk. So if you are on a H1B, right, if you are on a visa, that means you are less than 5 years, 10 years, 15 years in this country. Then the other problem we are facing is a lot of layoffs in the job market because of AI evolution. There is a lot of, right, all the big companies started doing layoffs, including TCS, which was considered as one of the best companies, like a government company. Even TCS is also doing layoffs. Microsoft, Meta, Google, Facebook. There are so many companies doing, and there will be a lot more companies doing layoffs. In addition to the job market, we also saw about that 100K proclamation from Trump. That is, right, initially there was a confusion because of the videos and everything, whether it will impact the existing or only the future applicants. So, yeah, it is confirmed that it will be only for future applicants. That means whose petition is not filed before September 21st, they have to pay that 100K. But Trump administration is completely against the H1B. So what they may do in the next 1 week, 2 weeks is they will increase the prevailing wages to 200K, 300K per annum. That means your I-797, it should show that you are making more than 250K, 300K. Then only you will be eligible for renewals, extensions. That means you should be a highly talented, uh, making more than 200 or 250 something, right? Because if they are planning to have 100K per annum or per petition, then they want the person to make minimum 200 or 250K for you to consider for the approvals or extension. So this is from the White House website. They mentioned that they are going to reform the H1B program as contemplated in the proclamation, a rule making by the Department of Labor to revise and raise the prevailing wage levels in order to upskill the H1B program and ensure that it is used to hire only the best of the best temporary foreign workers. A rule making by the Department of Homeland Security to prioritize high skilled, high paid aliens in the H1B lottery over these lower wage levels. That means if there is a lottery, instead of just picking randomly, they will see that, okay, this person, the prevailing wage is 300K. For this person, it is 400K. So whoever has highest wage levels in the petition, they will get it. So you have to pay the taxes like that. But how many jobs are there which can give more than 200K, 250K in states like Texas, right? Maybe if you are in California, your prevailing wage level may be 400K or so. So don't get relaxed that okay, whatever is on Friday Trump issued, the proclamation is only for the upcoming H1Bs. There will be definitely a lot of surprise because right they are saying that that proclamation is for 1 year, and if they are saying that it will impact only from next year, because those H1Bs will only travel after October, right, or after September 2026. That means that proclamation really doesn't mean anything. So definitely they did that in a hurry by mistake, but now they will try to come up with some programs which will also impact the current H1B holders or for renewals, for extensions, or whenever we travel out and come back inside, they will see that okay, is your prevailing wage more than this much amount or not. So that is also a major risk for all the H1. So if you are a citizen green card holder with over 20 25 years of experience, you have a certain type of risk. You are over experienced, you can be replaced by a 3 year or 5 year experienced guy. If you are less experienced and but you don't have a green card citizenship, you have another type of risk in this country. So if you want to continue your lifestyle, if you want to continue to support your family, your kids education, it is very very important for everyone to think of a plan B, right? Because all these years IT jobs were giving good income, good salary. Even if one of you, right, out of a couple, even if one is working, making anywhere around 100K, 120, 150K, that is good enough for you. But with these reforms, with these immigration changes, with this AI evolution, all these things, it is very high time for each of us to think about, have a plan B. Otherwise, suddenly something happens. Suddenly you get another proclamation. You may see another thing. You will be completely right with no way to do right to continue the same lifestyle because everyone has a lot of EMIs, car EMIs, home EMIs. If your kids are in college, the expenses will be much more. So you have to think about all those things and be ready with a plan B. So that is the major objective of this session, to see like what are the two strategies. So whether you are in this country or in some other country, what are the two strategies which can help us to continue our lifestyle in the same way, even though there can be immigration reforms or whatever it happens. So first we'll talk about strategy one, right? Both strategies can be done from anywhere across the globe. So the first strategy is where we use prop firms to do the futures trading. What do you mean by futures? Like you have futures like ES or Nasdaq or Russell or Dow Jones or gold, silver, commodities like crude oil, natural gas. You treat them like stocks, just like you buy Tesla stock, you can buy ES or you can buy gold. If you think gold is at a bottom, at a low price, you can buy it. And whenever it goes up, you can sell and take profits. Or if you think ES is overbought, it went so much high. If you think it will go down, you sell it and you buy back at a lower price, you make profits. So that's it. So don't think like, oh, futures trading, I don't know anything. It is very complex. So basically what we do is with the prop firms futures trading, you don't need to have huge savings. You don't need to have 50K, 25K, or even $10,000 in your account. You can do it from anywhere, including India, US, Canada, and around 90 plus other countries across the globe. And the major advantage with these features is, in addition to that, you don't need money. The major advantage is scalability. That means once you take time to learn, practice, there are so many companies which will allow you to trade the same futures, right? The same tickers like ES or NQ, GC, silver, natural gas. So the same trade you can do in, right? It is like you are writing a code and you can sell the code for Microsoft, you can sell that code for Google, you can sell the same code for Apple. You can make the payouts from all these companies. You can make money from all different. In the same way, you can trade from Apex, you can trade using Elite Trader Fund, you can trade using Take Profit Trader, you can uh, you can trade using Bullnox. There are nearly 40, 50 companies. Out of them, there are 10 to 15 reliable companies which are there since last 5, 6 years giving payouts. So that is the major advantage where you can scale up. But again, I'm not saying that you have to start with so many companies on day one. You start with one or two companies slowly. Once you understand, once you get the logic, then you can increase as much as you want. Whether you work for next 20 years also in the same IT company, the chances of you making double the salary is very, very minimal, right? The salaries are going down, jobs are getting reduced. But here, as you gain more experience, you can make more money because initially you may work with one company like Apex or Elected Fund. After few days, once you gain confidence, you will add one more company. You are doing the same effort, right? It is not that if you are working in two contracts, three contracts, you have to put 5 hours here, 5 hours there. You have to work for 16 hours, 18 hours if you are working, right? Earlier, 2, 3 years back, most of us used to work for two companies, three companies during COVID time because everyone was working from home. You had a lot of job opportunities. There was no inflow into the US. So everybody worked nearly two, three different projects at the same time. But you will spend some, you have to spend more time. But whereas here, you are trading in the same one account, but that account will copy the trades into multiple child accounts. That is the major advantage. That is the scalability, right? Whenever you do something, that is what we all want, growth in the life, right? You don't want to make same 80K 100K for entire life even after getting 20, 30 years of experience, because your expenses keep going up, your health will keep going down, your kids will be growing, their college expenses will be going up. But if you keep making the same salary, it won't be sufficient enough for you to lead a better lifestyle. So this is the advantage where you can scale up as much as you want. Another major advantage with this is futures market is open nearly 23 hours for 5 days from Sunday evening until Friday evening. Nearly it is open 23 hours a day. That means even though you are in a primary job in the evening time, right? Generally we use 8 p.m. to 9 p.m. Central. We make 400, $500 within 1 hour. Or if you can get up early, 6 a.m. Central to 7:30 a.m. Central is a good time. So like that, even before your work starts at 9 a.m. Central or 9 a.m. EST, you can take the trades in the evening times or morning times, and you can make profits. So you one major mistake most do in prop firm trading is they try to do over trading. They try to take trades when either it is too less volatile or where it is too highly volatile. At US markets, especially first half an hour to 1.5 hours, will be too highly volatile. Suddenly the candles will be so big. ES, NQ, gold, everything, RTY, YM, it will be moving up and down. So if you take trades during that time, there is a high risk where your accounts, right? You may make losses, you may hit the stop loss, your accounts will be blown. So it should not be too volatile. And also, if you trade when there is very less volatile, that means there is no volume at all, right? There are certain hours, like for example, if you trade after 11 p.m. Central, right, nearly until 1 a.m., 1:30 a.m., the volume will be very, very dry. It will be very less. Or if you trade between 11 to 12 p.m. Central, the volume will be very, very less. So if you trade when there is no volatility or very low volatility or very high volatility, it is very risky. There is a high possibility to lose the accounts. So we have to trade watching the trend, and you have to trade when there is medium volatility. It should not be too low, too high. If you do that, there is a high possibility to make nice gains. So again, in prop firm trading is completely different from your individual account trading. In individual account trading, you want to make more gains because you have a limited capital, you have one account. Whereas in prop firm trading, you may trade with one company, but that company will give you three accounts, five accounts, 10 accounts, 20 accounts. You can buy an account for $10, $15, $20, and you are only trying to make $200, but you can copy the same trade into 10 accounts. So that 200 will become 2000, right? It is very difficult to make 2000 using one account, but it is easy to make $200 using 10 accounts. So you are doing only one trade, which is where you watch that, oh, NQ is very bullish, or ES is bullish, or gold is bearish. Let me just take one trade. You see that, oh, RSI is below 50. Strength is above 20. Then score is minus 29 or minus 31. So this is looking very good setup. Then you just take one trade, you make $200, that's it. You copy the trade into 5 or 10 accounts. You made your $1,000, $2,000 for the day. You stop trading, right? Don't try to make so much of money, then market will basically take back all the gains. So that is the most common mistake done by many traders where they try to do over trading in the prop firms. If you can limit your trading to 1 hour a day for the prop firms, then you will have a consistency. You will also, because generally what happens is the psychology, when you make 2 or 3 trades, you make profits. The fourth trade, you will not watch for the entire confluence. You will not watch the entire setup properly. You will try to take some trade without watching all the indicators or all the indications, and you will do a mistake and you will lose all the profits back. But if you are only thinking that, okay, this 8 p.m. to 9 p.m. is my time, right? Once I make $300 in one account, I will be, right? I will not take any more trades. Once you set up like that, then you have a proper plan and you will try to get a best setup. So then you will make your target and you will stop trading for the day. So that is what is needed for prop firm trading. If you want to be successful, you have a set plan, right? Okay, 6 a.m. to 7 a.m. Central, right? That is a medium volatility hours. I'll just make 300 in each account, copy that into 5 accounts, 10 accounts. I'll stop for the day. Or 8 p.m. to 9 p.m. Central. I'll use this time, I'll take the trade and I'll stop for the day. Like that, if you can have a proper plan and you don't do over trading, you will be very successful. But if you try to keep taking more and more trades, more and more trades, you will make some thousand, 2,000, suddenly you will lose your $2,000. That's what is the common problem with the prop firm trading because that is not your own money. You try to gamble. You try to think like, oh, it is just $20, right? I am not losing my actual $1,000. It is only 20. If you try to gamble, then you will be keep blowing your accounts. But if you have a proper set plan, and you trade with a proper strategy, a proper edge in the market. Okay, if the score is like this, if momentum is like this, if strength is like this, I'll take a trade. If not, I'll ignore the trade. Then you will be very, very successful. So we have a lot of members with either iron fly strategy or right. This is like where you can keep withdrawing 5,000, 2,000, 1,000 daily. There are so many successful stories who are able to control their emotions, have a proper trading plan. There are right some success stories are here. I know, right, because of the live sessions and other things. I'm not getting time to schedule more, but there are a lot more members who are ready to share their stories. So again, on a high level, if somebody is completely new to prop firm trading, prop firm is nothing but just think like a IT consulting firm, right? IT consulting, the owner of the IT consulting, he can do the job or he can create a IT company and he can help some 10 members to get the job done or to get the jobs so that he can make 20% out of each one, right? As you are working, he is making that passive income, that IT consulting company. In the same way, prop firm trading person, he can use his money and he can trade, or he can divide some money to 10 people, 100 people, 1,000 people, 1 million people, and then he can keep making money. So that's what is a prop firm, just like an IT consulting company. A prop firm is like a proprietary firm which basically is ready to give some money to the traders so that while you trade, you make profits. They keep 20%, they give you 80%. But directly they cannot immediately go and give you 80%, right? They may not give you 50K, 100K capital. They want to make sure whether you can trade properly with a proper strategy, without emotions, with a proper discipline, with a proper consistency or not. That's where they do something called as a stage one, which is nothing called as evaluation phase or challenge phase. Uh, right? So that is where you pay $15, $20, $25 based on each company. There are so many companies, right? Every company has a different price. So you pay that 15, $20 and then they will give you a license. Okay, you get license for TradeOvate. You get the data plan for trade over it, right? If you have to go personal, open a personal account, you may have to pay $10 for the data. You may have to pay $10 for the license, all those things. But by paying this 20, 25, or 30, whatever it is, right, based on the company, you are getting all those licenses for you. And they will give you, okay, now you use these credentials so that you can get the real-time data, you can get all these things. So once you get that, for example, let us say Ravi is buying a 100K account of Apex, or 50K or 150K of Take Profit Trader, or 100K of LI Trader Fund. So Ravi will spend some $20 or $30 to buy an stage one account. So basically, in the prop firms, you have total three stages. Stage one is where it is like an internship, right? When you want to get a job as a fresher, you will do an internship where you don't really get paid. You do all the work, you learn from them, you do all the work, and then once you prove that you can do things better, that company may take you as a full-time employee. The same way in the prop firm world, you have a stage one or a challenge phase or evaluation phase where you pay some 20, $30 as a fee so that they can give you the licenses, data license, and license for the brokerage tool. One, you get that license and you have to, for example, on a 100K account, 6,000 is the target without losing 4,000. Then you will trade between that 8 p.m. to 9 p.m. or in the morning 6 to 7 a.m. And if you can make that from 100K to 106 without losing $4,000, then they will move you to stage two, right? Stage one is where you are basically paying some minimal amount, right? You are not using your own money. You are just paying them 20 or $30 so that they can know whether you are really talented enough to make profits or not. So your risk is only that 20, $30. So if you can get that account and take the trades with proper rules, proper strategies, then it is not difficult, right? If you don't overtrade, you don't go against the trend, or you don't keep on, right, even though you made some $200-300, again you are waiting for 1,000, 2,000, and you are not taking the profits, then again you may hit the stop loss. But if you can make the targets, right, and there is no limit, if you want, you can take 1 week, you can take 2 weeks, you can take 3 weeks. If you take more than a month, then again you will pay that 20, $30 for the next month. But there is no limit that within this many days you have to complete your target. So if you can successfully complete that, then basically they will move you to stage two. So stage one is completely a paper account. They are giving you a paper account with 100K paper money, and they are asking you, okay, now you make this 100K to 106K without losing 4,000, then we'll move you to stage two. If you can do that, then basically they will move you to stage two. In stage two also, it is a paper account, because some members, right, suddenly you got a nice bullish day or bearish day. Suddenly, with one, two trades, you may make that $6,000. So within 1 or 2 days, they will not gain the confidence to give you the real money. But if they don't give you the real money, even after 1 month, you will not be ready to keep, right? You will not be motivated enough. So in stage two, what they do is still they will give you paper account, and then they will say that, okay, if you make profits, even though it is a paper account, you will make 80% of the profits. Now, out of that 100K, let us say you made it to 110K. Then there will be a certain buffer, right? First 4,000 is like a buffer. After 4,000, whatever you made, $6,000, on that you can take the 80% of the profits. So even though that is a paper account, that company is taking a hit. That company is taking a risk of giving you a paper account and telling that, okay, now for some more days, you prove me that you can make money consistently before I can give you real money. So, but even though it is a paper account in stage two, you can make 80% of the real money. If you convert that 100K account to 110 or 120K, the company will give you 80% of the profits to you, even though it is a paper account. So once they see that, oh, you are doing a wonderful job in stage two also, then they will move you to stage three, right? That is where they are giving you a real account. Now they got enough confidence. Okay, stage one, you completed successfully. Stage two, you are consistently trading. You are not over trading, or you are not suddenly making 5,000 one day, making $100 another day. You are doing consistently every day, you are doing 300, 400 something, and you are stopping for the day. That means now they got confidence to give the real money to you. Then they will move you to stage 3 where you can make 90% of the profits. So that is the real money. So where they can also try to copy your trades into bigger accounts, or they can stay again, right? If they have thousands of members doing this consistently, they are not spending their time. They are passive, right? Even though they give you 90%, they are making 10%, 10% on each of your trades. Then that is the three cycles. Stage one, evaluation phase or a challenge phase, where you are risking 20, $30, $40, some minimal amount to get a 50K, 100K, 150K account. Once you prove that you can make profits without hitting the stop loss, you will move to stage two, which is called as a pro account or a performance account. Once you also consistently make profits, right? Sometimes, let us say you made $10,000 in one account in one day. They may move you to stage three. Or for 3, 4 weeks, you are consistently making every day 300, $300. Then they may move you to stage three. Like that. So either you make some nice gains, they may move you to stage three, or you consistently make small gains, but consistently you are doing it, they may move you to stage three after 1 month, 2 months. So once you move to stage three, that is called as a Pro Plus or as a live account, where they will give you 90% of the profits what you make. So that is the major advantage. You are not risking your own money and you can scale up as much as you want. They may give you 5 live accounts, they may give you 10 live accounts, or you may get some 5 accounts from 5 live from Take Profit Trader. You get 5 live accounts from Elite Trader Fund. You get 5 live accounts from Apex. You are again trading the same thing in one trading view chart, right? You are not putting extra effort or extra time, but you are copying your trades into all different companies. So even though you make $200, your target is only making $200 every day. But you are copying that 200 you are making in Apex, 200 with 5 accounts of Apex, 5 accounts of Take Profit Trader, 5 accounts of Elite Trader Fund, 5 accounts of Bullnox. Like that, you can scale up as much as you want. That is the major advantage with the prop firm trading, where your investment is low, where your risk is low, where your scalability is very high, and all you are looking is to spend 1 to 2 hours a day. That's it, either 8 p.m. to 9 p.m. Central or morning 6:30 to 7:30 or so. If there are no, right, generally on some days you will have some major events at 7:30 a.m. Central. Those days we don't want to take trades, right? If you have a report, some ADP report or job role report or some CPA report or PPI report, those days you don't want to take trades in the morning time around 7 o'clock. So because whenever that report, that government agency publish that report, suddenly there can be a huge bounce or huge drop. Suddenly your trade can hit the stop loss, right? Sometimes it can go reach the target, sometimes it can hit the stop. So that's where we want to avoid trading when you have major events. But if there are no major events, then morning 6 to 7:30, 6 to 8, 8:30, market generally opens at 8:30. That is where there will be too much of volume. 6 to 8:30, Europe market is open, US market, the pre-market is open. So that where you will have medium volatility. It will not be too less, it will not be too high, which is ideal. So if there are no major events, 6 a.m. to 8:30 a.m. Central. If there are any major events, 6 a.m. to 7 a.m. Central. And then 8 p.m. to 9 p.m. Central. These are the best hours where you can trade with a low risk, where you can easily make $200, $300 in each account. So that is the strategy one, where you can get a trading view account. You can open a trading view account because trading view is number one charting platform in the globe. So where we built some of our, right, you can even get this trading view account for completely free, right? You can get a 1 month free account. After 1 month, if you think it is working good, you can get it, or otherwise you can cancel the account. So within TradingView, they have essential plan, premium plan, like that. You can start with essential or you can start with premium during your 1 month free trial. And then at the end of the, because if you get a premium plan, you can add more indicators, you can add more alerts, all there will be more advantages. If you have essential plan, you can only do 5 indicators at a time, like that. So based on your risk and based on your how much you want to spend, right, the difference will not be much. Essential maybe $10 per month after first of a month. Premium maybe $20 per month. Generally during November Thanksgiving, they will give you 80% discount on all these plans. So you can start with a monthly plan. Whenever they give that 85% discount for Thanksgiving, you can even subscribe for the annual plan. So then we have some indicators where which will help you, right? For example, we have a scanner. That scanner will tell you, okay, is it bullish or is it bearish or is it choppy? We always should look for a trend in the market, right? Especially that 8 p.m. to 9 p.m. Central or morning time, you should the trend will work perfectly, right? Whenever you are in US market, there can be sudden up and downs, but during low or medium volatile hours, the trend will work perfectly. So that is where you see that, oh, this GC is looking bullish. Okay, then I'll take GC long. Or ES is looking bearish. Okay, I'll take a sell signal on ES. Like that, we develop some indicators which will help you to know, okay, which tickers are good for long, which tickers are good for short, which ones we have to avoid. Something is very choppy, there is no volume, or it is neither bullish nor bearish, we can avoid those tickers. If something is looking very bullish, then we want to take only long signals. If something is looking very bearish, we want to take only sell signals. So 9 out of 10 times, every day between 8 p.m. to 9 p.m., we are making 400, $500, right? Even on Friday, within 15 minutes, we completed that $800 challenge, right? There was one company which was doing a, right, okay, instead of making 6,000, if you make $700, we'll convert your evaluation, right? We'll convert your stage one to stage two. So within 15 minutes, before market opened, 8 to 8:30, we saw that, okay, this ES is looking good or this is looking good. We took trades within 10, 15 minutes, we completed the challenge, right? Every day, 8 p.m. to 9 p.m. We are using these indicators, making 400, $500 with very, very low risk. 9 out of 10 days, we are doing it. So you can get these indicators, right? Again, as I said, if you are uh, interested, I'm planning to give 1 week free trial, right? So that you can see in live in action. And once you gain confidence, you can subscribe to this, right? Because it is a high time for every H1B individual or for more, right? We know that more than 70% of H1Bs are by Indian community. So once you see that, oh, it is working, right? He is not just telling some stories. I can see in live that it is working good. Then yeah, you can subscribe to them. So that is what those software, right? First thing is TradingView is like just a platform. You are just getting you can get it for free for 1 month. Then our indicators, you can get it for free for 1 week. And then these prop firms, right? As I said, there are so many companies. There are 30 to 40 companies. Take Profit Trader, Elite Trader, Apex Trader. There are so many companies. You can start with one company or two companies. Like you can start with Apex Trader. They have some 80%, 90% discount going on, right? Because these companies are not my companies, I cannot do, but I can suggest you that, okay, this company is giving 80% off or 90% discount. You can use this code and you can get the plan for $20 so that you can try for a week or two. And if you think it is working, right, if you follow the rules, follow the system, you will be successful. If you just trade without any proper plan and you trade continuously, keep trading, you will lose your accounts. But if you trade in a proper time frame, using a proper strategy, then definitely you will. So out of these prop firms, you can start with one or two companies, and then you can. So I'll share that there are some discount codes. You can use those discount codes, and you can start with any one company, and then there is, so that is the, so one is trading view, second is our indicators, third is the prop firms. The fourth one is there is a software called Replicanto. Again, as a beginner, you don't need it. But once you gain some experience, once you gain confidence, then you need this Replicanto software, which will help you to, right? That means when you are trading in one account, you want the same trade to go and copy into another 5 accounts. This Replicanto software will help you to copy the trade so that when you buy 5 accounts from Apex, you don't need to trade individually in one by one account. Whenever you trade in account one, the same trade will go to account two, account three, account four, account five, and then the same time you can complete the stage one in all 5 accounts. Same time you can make 200, $300 profit every day during 8 p.m. to 9 p.m. In the in your stage 2 or stage 3. Then that is the replicanto. But if you are completely beginner, you don't want to start buying, right, investing money in replicant, all these things. First, you start with one account. Once you gain confidence, then you go to the replicant. And then basically what we do, we use this futures level manager or RLM, and then MTF scanner, right? The scanner will tell, okay, this is a plus 31 or plus 29. This is good for buy. This is minus 31 or minus 29. The momentum is less, or this strength is more. Sellers are very bearish. Then you do sell. Like that, we have a scanner, and then we have another indicator which will give you buy sell signals. We use the confluence, we take the trades, and we can easily make 300, 400 every day, or minimum 9 out of 10 days. Sometimes suddenly there will be some sudden candles or sudden news or something. Most of the times during this time, generally you won't have any news. So that's why I'm suggesting that 8 p.m. to 9 p.m. or 8:05 to 9 p.m. is the best time to take these trades, make 300, 400 every day from Sunday evening until Thursday evening, every day 8 p.m. to 9 p.m. If you can focus and you can take the trades, that is good enough, right? Even though you are making 300, 400, you can copy that into 5, 10, 20 once you gain experience. So that's what can easily replace your full-time income what you're making from an IT job. That is our strategy one, where we are low risk, low investment, and you don't need to stop your IT job. You can do this as a part time. Once you gain confidence, once this income becomes more than your IT job, then you can even quit your job or fire your boss, or you don't need to worry about visa changes, immigration changes, what Trump is tweeting. You will be fully confident, right? You are ready with the plan B. So suddenly, if something goes wrong, now you don't need to worry, because you can do this from anywhere across the globe. So then, right, that is about strategy one. So before I go to strategy two, please let me know if anyone has any questions on the strategy one, and then I'll explain about strategy two. You can put your comments in the chat. Nick, again, it is, if we follow a proper system, proper strategy, and a proper timings without over trading, definitely it is possible. You will need 1, 2 weeks for practice. That 1, 2 weeks also you can do on a sim account, on a paper account. You can practice, and once you gain the confidence, then only you can go to the getting the prop firm accounts and all those things. So in all this, everyday session is recorded, and you can watch all those recordings. How we are making 400, 500 every day between 8 p.m. to 9 p.m. For each account, you have to pass one evaluation, right? It is not that once you pass one evaluation, they will not give you five stage two accounts. So for every one account you pass, they will give you one stage two account, like that. So Uh, yeah, indicators give you buy sell signals. Indicators also will tell you, okay, these stickers are good to take long signals. These stickers are good for short signals. These stickers are choppy. So one indicator will tell you which ones you have to buy, which ones you have to sell, which one is choppy. One indicator will give you buy signal, sell signal. So if it is telling that it is a bullish sticker and you got a buy signal, then that is a good opportunity. Or if it says this is a bearish sticker, now you only wait for the sell signals. You don't take buy signals on the bearish sticker, or you don't take sell signals on the bullish sticker. You go along with the trend. So there is a multi-time frame scanner which will look at all different time frames, and then it will say that, oh, based on all 5 minute, 15 minute, 1 hour, 2 minutes, all these things, this ES is looking bullish. This NQ is looking bullish, GC is looking bearish. Then if the scanner says it is bullish, you only wait for the buy signals from indicator 2. If scanner says bearish, you only wait for the sell signals from indicator 2. Like that, you are using the confluence between two different indicators and taking, right? You are not just using one indicator, and if that tells buy, sell, you are not taking the trades. First thing is you use the scanner as your input. That will tell you out of this 10 futures, these are two are bullish, two are bearish, six are choppy. Ignore the six tickers. Don't look for the buy or sell on those six tickers. Only you will watch for the most bullish, most bearish. If it is most bearish, you watch out for this, because market will never go in one direction. It will go down and then it will go a little bit up and then again start dropping. So whenever it goes up, it will give a buy. Again, when it starts dropping, you will get a sell. So that is what you want to sell the rallies for a bearish ticker, buy the dips for a bullish ticker. Price will keep going up, suddenly drops, and again starts moving up. You want to catch that drop and you want to buy like that. So again, the cons, you cannot hold the trades for more than one day, right? If it is a personal account, you can hold for more than a day. You can hold for 2 days, 3 days. You can have your, based on your risk profile, you can hold it for, even though it may go $2,000 less, 3,000. If you think like, oh, yes, is too much overbought. Let us say you shorted it, but you think maybe next week it will go down, right? Because of FOMC, all these things, it went up. But maybe Sunday, Monday, it will be choppy. Then Tuesday, it may be drop big like that. Then you have full control in your personal accounts. You can hold as much time as you want. When you are doing in a prop firm, all the trades should be closed by, right? Or anything you open today after 5 p.m., you have to close them by 4 p.m. They have tight stop loss rules, right? You cannot just hold the trades. If they hit a certain stop loss, then again you have to start from the beginning, right? You have to reset your accounts. You have to again, if you, for example, you from stage one, you went to stage two. And in stage one, you made nice profits, you got stage two. But in stage two, because it is a real profit, real money you make, the greed will start coming. And you want to make more and more profits. You don't want to stop at 200, 300. Once you make some 300, 400, you feel like, oh, it is real money, I'll make 80% of it. You will try to take more trades and suddenly it drops. It will hit the stop loss. Right? Again, you have to either pay more amount and reset it, or you have to again start from stage one. So like that, these prop firms have tight stop loss rules. Tight, you cannot trade. Right? Some prop firms will not allow you to trade during news. You may think like, oh, FOMC, ES will go up, NQ will go up. In a personal account, you can take a trade, hold it for a long time. But here, some companies will say you should not trade 1 minute before or 1 minute after this news. So like that, you have to follow the rules and regulations by the company. That is the disadvantage. Sometimes you may know that it will go up, but because you cannot enter a trade, that is a risk, or that is a drawback. Like that, you have disadvantages with these companies. Or so it is not automated trading. It is more like a manual trading. But indicators will tell you when to buy, when to sell. You use the confluence between multiple indicators, and we click on the buy side. Because automated bots, the problem is they work on trending days, but suddenly there is a very choppy day. Your bot will continue to take the trades even if it is very choppy, or suddenly it becomes choppy. So that's where, if it is completely bullish day or bearish day, your automated bots will make nice profits. Suddenly market turns choppy, right? First 1.5 hour it will be trending. Next 1 2 hours it will be choppy. Then whatever profits you made in the first 1 hour, you may lose next in the choppy, right? Suddenly it goes up, then bot takes a buy signal. Suddenly next candle it drops. Again it drops, because it dropped. It took a stop loss on the buy signal. It takes a sell signal. Then suddenly it goes up next minute. So that's what happens, right? If it is a range or choppy, the parts may not function properly. If there is a huge trending day, either upside or downside, the automated bots will make more profit. So rather than depending on the bots, because when you do manually, you can use your intelligence, or we can use our thought process. We see that, oh, this time is very choppy time, so let's not take the trades. This time is a good time, let us take the trades, like that. That is better. So that's where your manual trading will have definitely much success rate, compared to, or you have a huge red candle. Suddenly the bot may, at the close of the trade candle, the bot may open a sell signal. Whenever you have a huge red candle, the next candle will be a green candle, right? Minimum 30%, 40%, it will go up and again stop. So your accounts may hit the stop loss when such type of things can happen. So that's why bots have certain demerits or disadvantages compared to manual. When you do manual trading, you see a huge green candle. Even though there is a buy signal, we have to wait for the retracement of the next candle. Wait for the whenever the candle is so big, you wait for the next candle and then you decide whether to go long or not. Because generally when the candle is very big, either a red candle or green candle, the next candles will be reversal candles. That you can manually you can decide, but when the parts are there, they will only look for okay buy signal or sell signal. And so that's where you have certain disadvantages with the automated bots. Right. Again, this platform trading is in 100 plus countries, so it is not just the US or anything. So anyone from any country can do this trading. So right, we are talking like if something uh, right Trump goes on with more and more proclamations, with more for existings, for renewals, amendments. So this is about a plan B, where irrespective of what visa you are, or if someone is on H4EAD, or you can even use parents' address, parents' name, and you can buy the accounts using their name because it is not limited to US. That is the major advantage. So there is no risk, right? Even if you only whatever you are spending to buy that account, that is your cost. Suddenly, let us say they gave you a real account, stage two account or stage three account. You lost $3,000. You are not liable for any of those losses because they are already doing all the screening. They are doing the stage one, then they are doing stage two, then only they are giving the real money. So even if you lose, also, you are not liable for any of the losses because you already completed all the screening. They are agreeing. Once they got confidence, then only they are giving you the real money. So your risk is minimal here. So you are looking for a, $1,000 cost for the 3 months, right? Approximately $1,000. If you are looking, right, let us say you want to start with one prop firm. So for trading view, you are paying approximately some $20-$30 for 3 months. Let us say for our indicators, you are paying approximately $900. Maybe another $100-$200 for Elite Trader Fund or Apex, which are generally less expensive. So your entire cost is approximately $1,000 to $1,200 for 3 months period. And where if you properly follow the rules, properly follow the strategy, then within one day you can make that $1,200. Right? Maybe first 2 weeks you will just practice. You may not really take any trades. You watch and see that, oh, is it really working or not? If you think like it is working, then that is where you can take the real trades. First 1 week, 2 week, right? Within 1 week you will understand, right? That's where I'm giving you 1 week free trial. Trading where you are getting it. So only cost for you in the first week is that prop firm where you may pay some $20, $30 to get Apex account or Ally Trader Fund account or Bullnox account. So that is your cost. Within 1 week, you see that oh, 8 out of 9 times or 8 out of 10 times we are making gains, or 4 out of 5 days we are making gains in between this 8 p.m. to 9 p.m. Central. Once you gain the confidence, then your real cost will start. You are looking at approximately $400 per month if you are starting with one company. Again, if you want to, once you gain confidence after 2 months, 3 months, you can increase it to two companies, three companies. Right, your cost will change only based on the number of prop firms you want to trade, number of accounts. Right, again, each company will tell you. Apex will give you up to 20 accounts. Take Profit Trader will give you any, you can get any number of stage one accounts, but stage two, there is a limit. So if you want, you can get 30, 40, 100K accounts or 30, 40, 150K accounts of Apex. But they will only tell, even if you pass all 30, 40, they will only give you 20 stage two accounts. Only, and so you can make only money on 20 Apex. In the same way, Take Profit Trader, you can open 5, 10, 15, 20 stage one accounts, but they will give you only 5 stage 2 accounts at a time. If you fail any of those five, then you have another five you can use. If you lose one, then out of the balance which is already where you completed, that will become a pro account like that. So So based on how many accounts you want to trade, if you want to just start with one company, you want to take only two or three accounts with Apex or like Trader Fund, your average cost you are looking is $400 per month. So they have right companies like Rise and PayPal, so they will take care of all those taxation everything. So it is not mandatory that you have to trade daily, but weekly once minimum you have to trade, especially if you are in stage two or stage three. Certain companies have a rule that you have to trade minimum once a week, but it is not mandatory. There might be some days you may be very busy with your job. There might be some days where you may be sick, where you might be traveling. So it is not mandatory. Every day you have to do, but you can do minimum weekly once you have to take the trades because they are also paying for the data and all those things. So if you are not using, those accounts will become static. So that is about strategy one, right, which is our backup plan in case of any problems with these visas or immigration issues or anything, where your investment is minimal, you are not risking your own money, you have a lot of scalability, you can do outside your office hours, you can watch me taking the trades. Once you gain confidence, right, it is all about following a system. Oh, the score is 31, the momentum is above 50, strength is above 20. Okay, this is telling buy, I got a buy, okay, I'll take a buy. That's it. Or the score is minus 31 or minus 29, momentum is below 50, strength is above 20, I got a sell, okay, now I can take it. That's it. So just we need to follow that simple strategy. But because of our psychology, greed, or becoming panic, we make mistakes initially. But as you gain more and more practice, and once you watch me taking the trades, then you will slowly realize that, oh, I should not do over trading, or I should not do like this. I should not trade during this opening hours. When it opens, the candles will be so big. Or whenever there is a huge big candle, I should not immediately go for a buy. If there is a huge red candle, I should not immediately go for a sell. Like that, certain things, even though we explain in theory, when you make a mistake, practically, that is where you will learn. And once you stop doing the same mistake, then you will become more and more confident each day, and you can scale up as much as you want once you become confident. So that is about strategy one, prop firm trading with futures. So don't complicate futures. It's just like a stock. There is no theta, there is no right option Greeks or anything. It is just like buy low, sell high, buy low. That's it. If you think price is very bullish and you got a drop, that is a good time to buy. If it is a bearish ticker, you got a rally and you got a sell signal, that is a good time to short. So that's it. Just like you buy Apple stock or Tesla stock, Nvidia stock, same thing for futures. Only thing is instead of NVDA or AAPL, TSLA, you have generally two word symbols like GC, SI, CL, like that. There are only 10, 15 T, right? In stocks, you have thousands of stocks. Here you have mainly 10 tickers. If you just focus on those 10, that is good enough. You don't need to worry about thousands of tickers. So that is the strategy one. Then strategy two is where we do something called as SPX and XSP. So what is this SPX and XSP? SPX is one of the number one ticker in the entire right in the trading ETFs. That is the most liquid ticker. That means that is traded across the globe. There will be millions and billions of transactions every day. So SPX, just like your ES or SPY, SPX is an ETF where there is no stock for SPX. It is only options. So that means there is no stock assignment. Even it is completely cash settlement. That means you don't have to suddenly it goes up or goes down. You have only risk of either you make money or you lose money, but suddenly they won't assign stocks to your account. Right? For example, let us say we bought Oracle's options. Suddenly Oracle dropped so much. They may assign the Oracle stock to your account. You did some bull puts or you sold some calls or you sold some puts. If something happens to that stock suddenly, you may get assigned. Or Tesla, you got some, you did some bull puts thinking Tesla will go so much high. Suddenly stock dropped due to some, right, yesterday there was some major accident for a Tesla car. suddenly tomorrow Tesla may drop so much. You may get assigned those stocks, so your account will be completely. You will not be able to take any more trades until you have to take a loss or you have to wait for few more days for Tesla to bounce back. Then only you can use your money to take other trades. But whereas with SPX, it is completely cash settled. There is no stock assignment. You don't get assigned. So XSP is the 1/10 of the SPX. So if you have a small account or you want to practice initially to see whether the strategies are working or not, you can start with XSP. Your risk is 1/10, your reward is also 1/10. That means on SPX, if you make 1,000, here you make 100. On SPX, if you lose 1,000, here you will lose $100. So your risk and reward is only 1/10. Same like SPX, there is no stock assignment with XSP. Even though suddenly there may be huge bounce, huge drop, it will be only cash. The loss or profit will be cash settled. There is nothing like a uh, stock assignment. So the another advantage with this trading also, even if you have 3,000, 4,000, you can do this iron fly strategy trading. It can be done from anywhere. You don't need to be in US. And generally, we have to open a trade around 9 o'clock, 9:05 Central. And you can set an automatic closing orders, right? Whenever you open the trade, you can say that, for example, you are collecting some $20 or you are collecting some $18. You can set a closing trade that, okay, if you collected a premium of $18, if it goes down to $9, you automatically write the 50% profit target. The spread value became $9. Now you can automatically close the trade. Or you can, so you bought some five, you sold five spreads. On four spreads, you can take the profit. You can hold just one contract until end of the day. Like that, all you need is 5-10 minutes around 9 o'clock to open these trades. So for this, right, this is one ticker, one strategy, and you need 1 week of practice. Right, you are not again either SPX or XSP. You don't need to worry about what happening to Tesla, what is happening to Nvidia, what is happening to Meta, Apple, Google, Microsoft, because there are thousands of tickers. If you try to focus on too many things, we may miss the other things. So best thing is if you just focus on SPX or XSP every day, it is more easy or it is more easy to make money. And whether you have a 2,000 or 20,000 or $2 million, you can use this strategy. So if you have a cash or margin account also, it is fine. And you can have either Think or Swim, IBKR, Tradeer, TradeStation, whatever brokerage you have, that is okay. And you don't need to have a huge experience in trading this. And you can trade this as a part-time or full-time, right? If you're a full-time trader, it is much better. If you're a part-time trader also, you can open this around 9 o'clock and then you can either let it expire or you can just put a automatic trading order. You collected a premium. Whenever the value becomes 50% of it, then you can just close the trade. And it is just a flexible strategy, which works for everyone. And you don't need to be trading all day. You don't need to be before the charts for entire day. And you don't need to have lot of indicators or for this one. And you don't need to learn lot of stuff. Right? Again, it all needs is one day to understand the concept. And you don't need huge money, 10,000, 20,000, 50,000 to do this strategy. So if you have $2,500 cash account, we use the SPX ticker, we use the iron fly strategy. And for first 1 week, you can practice, right? That's where I'm giving you one free week of access. So you can watch for 1 week. And once you see that, oh, it is working, then you can take a decision. So it is completely different strategy because most of the days price will, right? Again, 80% to 85% of the time, price will stay in a certain range, right? There might be some sudden days where it may go out of the range, but whenever if SPX is moving within a 30 to 40 point range, right, that is a normal range for SPX ticker. It moves up and down within that 40 points. So this iron fly strategy is where either it goes up, goes down, stays consistent. If it stays choppy, that is where we can make much more profits. If it is too bullish, too much bullish, above that 40, 50 point range, if it goes so much high, or if it goes below, right, much below that 50, or it drops so much, above 50 point drop, that means suddenly the black swan events. Suddenly some war happens, suddenly some COVID type of thing happens. So those are the days where we have a risk. But unless if there is any major news, major event, or unless we make some mistakes in taking the trades, generally 8 or 9 out of 10 times we'll make profits with this iron file strategy. So as I mentioned, this SPX and XSP, they are completely cash settled. There is no stock assignment, and it is an income generating strategy, and it is a defined risk. That means you already know when you enter the trade, you know how much is your maximum loss and how much can be your maximum gain. So with this SPX XSP, uh, the tax treatment is also an advantage. That means with generally all other stocks, you have to pay short term. If you open and close the trades within less than a year, you have to pay short term taxes. With the SPX and XSP, you have a 60/40. That means 60% of profits you pay long term tax, 40% you pay the short term. And there are many brokerages which also allows you to trade even 24 hours with SPX like IBKR, Think or Swim. There are some companies which will allow even after hours also you can trade SPX and XSP. So generally, right, most know about buying a stock, selling a stock. That is the first type, right? Whenever something Tesla is at a low price, you buy it. When Tesla goes up, you sell it. But the problem with stocks is you have to invest a huge money to make some small return of investment. That means if you put some $350 on one stock, if it goes up some $10 after 1 week, your ROI is very, very minimal. You are taking a risk. Suddenly, if there is a bad news, it may drop $10, $20. Your risk is high, your return of investment is low. Whereas with options, you can do something called you can buy a call. If you think price will go up, you can buy a call. If you think price will go down, you can buy a put. Okay? They are called as a contract. That means you are not really buying a stock, you are only buying a contract by paying a small price. Instead of buying investing $350, you may invest $3 per stock. If you think Tesla will go up on Monday, you may put some $3 per stock. That means for 100 stocks, right? For buying a stock, you have to spend nearly 350, $370 for one stock. Whereas here, for a bullish contract, that means you are thinking Tesla will go up or Oracle will go up tomorrow, right? Because there is an agreement between Oracle and Nvidia and Microsoft. Oracle may move huge. So if you think something will go up, with stocks, the risk is less, but your investment is so much, your ROI is very less. Whereas with options, if you are right with the direction, your investment will be more, your return of investment will be high. That means suddenly, if it you buy a call, suddenly Oracle goes up tomorrow, you'll make huge profits. You can make 50%, 100%, 200% within a day. Or let us say you are bearish for QQQ or SPY because it went so much high in last 2 3 days. There might be a retracement tomorrow. You buy a put and suddenly SPY drops or QQQ drops, you make money. But with calls and puts, the problem is the direction should be right, and the movement should be quick. That means if you buy a call, but only on the last day it goes up, you may lose a lot of value, or it stays choppy, right? You bought a let us say Nvidia 180 call. Nvidia stayed at around 175 entire week. You may lose all your premiums. You paid some $200, $300. You may lose premiums. If it for 3 4 days it stayed choppy, last day it went up, you may still lose, right? So your direction should be right, and also it should be quickly move. If it takes a lot of time, also you will lose. So there is a concept called as vertical spreads or credit spreads, where if the direction is right, or if it stays choppy, also you can make money, right? So that is called as a bull put spread and bear call spread, where so when you buy a call, only if it goes up quickly, you'll make money. If it stays choppy or if it goes down, you will lose money. When you buy a put, only if it quickly goes down, you'll make nice profits. If it stays choppy or if it goes up, you will lose. That means one out of three possibilities, you have a risk. Only one way you will make profit. Other two ways you may lose. Whereas with the credit spreads, if you do a bull put spread, that means you are bullish for something. You are thinking Tesla will go up or Oracle will go up tomorrow. You are doing a bull put. If it goes up, you will make nice profits. If it stays choppy, you will make nice profits. If it drops little bit, you will make profits. But if it drops so much, you have a risk. Right? In the same way, you are doing a bear call. That means you are bearish about something. You are collecting the premium because your indicators are telling it is bearish, and you are doing a bear call. And if it drops, you will make nice profits. If it stays choppy, that means it is just moving there itself. You will make profits. If it goes little bit up, you will make profits. But if it moves so much high, you will lose. So you have more probability, more chances of making money when you do credit spreads rather than buying a naked call or a naked put because you have more chances, right? Trading is all about possibilities and probabilities. So you have more probability here to make money based on uh, based on your indicators, or you have because you have more chances. Even if it stays choppy, you'll make money. If it goes up, you'll make money. If it goes little bit down, you'll make money. But if it drops more, you will lose if you do a bull put. So a put credit spread is basically whenever you are bullish about something. A bear call spread is when you are bearish for something. So in the naked call, naked put, you are just a buyer, right? You are just like a buying an insurance, right? Just like assume that you are buying an insurance policy for your car. So if nothing happens, then basically that company kept all the money, right? Only if something happens. So the possibility of something happening to your car is only 1 or 2% out of 100. That means only if that 1 or 2% happens, then you are at benefit. Otherwise, the company is at benefit. So, as a buyer of the insurance policy, your auto insurance policy, two persons are getting benefited. 98% of the time, company is making the benefit. So, do you want to be the 2%? Do you want to be the 98%? Right? In options, naked calls, naked puts also, only 2 to 3% people make money, and remaining 97% lose money with the naked calls and naked puts because either market we sometimes we make mistake. Oracle suddenly went so much high, but we did not book the profits. Suddenly it dropped. It stayed choppy throughout the week. Or Intel or Lyft, there was a positive news. It went up because sometimes even though we make profits, we feel like oh Intel we got a very good news for Lyft. It may go much further high. We will not book profits on time. Suddenly it becomes choppy. You will lose all your premiums. So 95 to 96% naked call buyers, naked put buyers will lose money. Whereas 95% of the time, the people who sell the call, sell the puts will make money. But you cannot just do naked sell, naked put because if you are selling without a hedge, you have a huge risk. Let us say you are assuming Tesla will drop. You are selling a 320 call. Suddenly, Trump comes with some announcement that, oh, I am giving this additional contract to Elon Musk. Suddenly, Tesla may go another 20, $30 up. So, if you are selling a naked call, you have a huge risk. So, that's why, even though as a seller you have more probability of success, you should also do a protection. You should have a hedge. You should have some insurance. Suddenly, it goes up, you should have a. So, that is what is a spread, a bear call spread or a bull put spread. You are a seller, mainly you are a seller, but you also doing a buy transaction so that in case of any sudden moves, you have a protection to protect you from unlimited loss. Because when you buy a call, buy a put, whatever premium you are paying, that is the only risk. But when you are a seller, a naked call, if you are a naked call seller, naked put seller, you have unlimited risk. So that's why you are not only selling something, you are also buying something. Right? For example, you think Tesla will drop. You will sell 375 call, but you will also buy a 380 call. So that suddenly if it goes up, your risk is only this 5 points. If it drops, you will make more profits. If it stays choppy, you'll make more profits. But because of sudden black swan event, if it goes up, then you are protected. Your risk is minimal. So That's what we do in a bull put or bear call. Even though you are selling a call or selling a put, you are also buying a call or buying a put as a protection. So what we do in iron fly is, so iron fly strategy is where if we think SPX is bearish, you sell a call, you sell a put, and at the top you also buy a call. At the bottom you also buy a put as a protection. So if market stays choppy throughout the day, right, 80% of the time, first 1.5 hour market will be bullish. Next, last 1.5 hour market will be bullish. In between, it will be choppy. So that is where we want to use this iron fly strategy. Or first half an hour, 40 minutes, it will be very bullish. Last 30, 40 minutes, it can be, or it will be in a trend. That means it can be very bullish or it can be very bearish. Last 1 hour, it can be very bullish, very bearish. Generally, between that 9:30 till 1:30 p.m. Central is, it will be little choppy. It will be moving up, moving down, moving up, moving down. That is where this iron fly strategy will work great, where you are selling a call, selling a put. If it stays choppy, you will make nice profits. If it drops little bit, you'll make nice profit. If it goes little bit up, you'll make nice profit. So 8 to 9 out of 10 times we can make profits with this iron fly strategy. So our indicator will tell that okay, now if you can, right, around 9 o'clock, it will tell you today you can do a sell. Right? Sell iron fly means if SPX is at 66.50, right? For example, on Friday it was at around 66.50. It gave a sell signal. You sell 66.50 call, you sell 66.50 put. You go 25 to 30 points above, you buy a call. You go 25 to 30 points below, you buy a put. So you are selling at the money. That means whatever is the current price, you sell it. Then go 25 points up or 30 points up, 25 points down, 30 points down, and you collect the premiums. So because you are mainly a seller, as a protection, you are buying a call and buying a put at the top and bottom. So if price stays choppy, you will make nice profits. So generally, what we do is when you make 40 to 50%, you trim 80% of the right. For example, if you are a big account holder, you take five contracts, 10 contracts, 20 contracts. Then you whenever you make 50%, you can trim. So on Friday also, initially it gave a sell signal, it dropped nearly 20, 30 points. It made nearly 70, 80% profit. So you can trim 80% of the contracts you took. And then if you don't want to take any risk, whenever you make 50% profit, you can set a auto order, right? Whenever you open the iron fly, immediately you can also set a limit order saying that okay, if I make 50% profit, you just buy it back. That means you are selling a call, selling a put, and buying a call at the top, buying a put at the bottom. And you are collecting some $1,800, $22,000 as a premium for selling a call and selling a put at the money. When you do that, suddenly it starts dropping. The spread value will become 1,000. You can set a limit order saying that okay, if I make 50% profit, then automatically this spread should get closed. Because again, last 1 hour suddenly market can go up. Right? That's what happened on Friday. Right? Wednesday, Thursday, Tuesday, we made nice profits. Friday, suddenly last 1 hour, suddenly it bounced high. So we were not able to close all the contracts. We had to take some loss on Friday, right? Because we did not close it on time. So if we can use the time between 9:30 to 1:30 p.m., where the market is choppy, that is where this iron fly strategy works best. So that is where we sell the call, sell the put, and go up above 30 points up, 30 points down. You do a protection so that even though market goes so much high, so much down, you are protected. You don't have a huge risk. So 8 to 9 out of times will make easily 50% profit. If market is very bullish, our indicator will tell okay, buy iron fly. If market is looking little choppy, bearish, it will the indicator will tell it will you do a sell a iron fly or sell 2x of iron fly. That means every day if you take one contract, today you can take two contracts. If it says sell iron fly, we are selling a at the money call, at the money put. That means if SPX is at 66.50, 66.52 at that time, you sell that at the money. That means at that current price, whatever SPX is, you sell that call and put. and you collect premiums, and you can set a 50% target, minimum on 80% of your contracts, so that whenever you make 50%, you close. If it exactly closes it at around that price, then you will make 100% of the profit. Right? For example, you are selling a 60 tomorrow. Let us say you are selling 6660 call. You are selling a 6660 put, and you are buying a 6690 call. You are buying a 6630 put. So if it stays choppy, you will make nice profits, right? If market is just moving in 10-20 point range entire day or 30-point range, you will make nice profits. If it goes down 5 to 10 points, you'll make nice profits. Or it goes to 66, 65, 70 and stays there, you'll make nice profits. Only if it goes above 30 points up, below 30 points down, that is where you have little risk. But if it moves in a choppy or in a range direction, if it goes little bit up, little bit down, if it stays exactly at 66, 60 at the end of the day, then all 1800 $2,000 collected is yours. So for each contract, your risk is 2000 or 2500 max. So if you have a 2000, 2500 account, you go 25 points up, you go 25 points down. Because on one side, definitely you will make profit. On other side, you may have a loss. But if it stays exactly at the same price by end of the day, you will make profit. Or let us write, for example, let us say it stayed at 66.70, right? You sold a 66.60 put, you sold a 60.60 call, and you bought a 66.90 call, you bought a 66.30 put. So let us talk about different scenario. The best possible scenario is market is chop, right? Because last 2-3 days it was very bullish. Mostly it will be very choppy tomorrow. If it stays exactly at that 66, 60, 61, 62, nearly whatever credit you collect in the morning, right? In the morning, if you collect around 9 o'clock, you may collect around $2,000 on a 30-point spread. That means your maximum risk is $1,000. If you make, you may make anywhere from 1,000 to 2,000. If you lose, you will lose 1,000. So you have more than 1:1 risk reward. So if market stays around 66.60 by end of the day, all the $2,000 will be yours. If it, let us say it goes to 66.70 by end of the day, that means still out of 2,000, $1,000 is yours. Or it went to 66.50, then 1,000 profit, still your 1,000 profit. That means it went up, you will make profit. If it stayed choppy, you will make profit. It dropped 10 points, you will make profit. Or it went to 66.80, that is like a break even. Or it went to 66.40, that is like a break even, right? Because from your pinpoint, it moved 20 points down or it moved 20 points up because of theta decay, implied volatility, all those things. You don't even need to wait until end of the day, right? Because from 9:30, 10 nearly until 12:30, 1 o'clock, it will just move up and down, chopping. So if you nearly by 1 o'clock, you will make 30%, 40%, 50% profits. You can, that's where you already book some profits. So that even suddenly last 1 hour it goes up or goes down, you have a minimal risk, right? Because you already collected out of 5 contracts, you made some thousand on 4 contracts. So already you took 4,000 profit. That means the last contract, even if it goes 40, 50 points up, 50 points down, you have a minimal risk. So that is the iron fly strategy, where if the indicator tells that, okay, today you can sell, right? Most of the days, if you get a sell signal, that is much better, because as a seller, your implied volatility, theta decay, all those will become advantage to you. Some days, if market is too bullish, the indicator will tell, okay, today you can do a bull, right? You buy the in the money call, buy the in the money put, and you go up and sell the call. You go down and sell the put. That is called as a long iron fly. Short iron fly is you sell the in the money call, sell in the money put, you go 30 points up, 30 points down, and you buy a call, buy a put as a protection. So using this strategy, and you can set a automatic closing order. Okay, whenever you make 50% profit, close the trade. then 8 to 9 out of 10 times we'll make profits using this strategy. All you need to do is around 9 o'clock, you have to open a trade and you set a closing order. And then if you make nice profit because of the 330K imply IV crush, all those things, generally you'll make 50% profit before 1 p.m. If you're full-time trader, you can focus. Otherwise, you're busy. Then you can just open the trade and let it expire, let it close by itself. You don't even need to keep watching it. Or you don't want to take risk in the last 1 hour where market makers will come back and suddenly move down. Right? That's what happened on Friday. Suddenly they came nearly until 1:30. It was completely choppy. Suddenly last 1 hour, suddenly they took it up. So, but most of the days, right, Wednesday, Thursday, Monday, we made nice profit, right? Nearly 9 out of 10 times in September, we made nice gains with this strategy. Only Friday, we had to take a loss. So that is the iron fly. So you don't need to worry about so many tickers. You don't need to worry about thousands of stocks. All you need to do is watch SPX, look for this indicator, whether it is telling to sell iron fly or buy iron fly. If it is telling sell iron fly, you sell in the money call, in the money put, collect the credit. Then you put a 50%. Uh, Whenever you make 50%, if you are collecting 2,000, you will say that, okay, whenever I make $1,000 profit, whenever the spread is at $10, then close the trade. Whenever you buy a iron fly, that means you are buying a in the money call, in the money put, you are selling, you are going above and 30 points, you are going below 30 points, and you are selling a call and put. So that is where you have a nice strategy where we can make 90%, we can make success with this. So because of theta, implied volatility, all those things, you have more advantage. You have less risk whenever you have a sell, you have much lower risk because you are collecting the premium. Even if it stays choppy, if it goes little bit up, little bit down, as long as it is in the 20 point up or 20 point down range, you will be in profit. Only suddenly there is a sudden tweet by Trump or sudden news where market goes so much down or so much up. Still, you already collected some premium and you already have a hedge. So your risk is not right. If you collected $2,000, your maximum risk is another $1,000 on a 30-point spread. Either you make 2,000 or you make 1,000, or maximum you lose 1,000 using the iron fly strategy, and 8 out of 10 times will be in a profitable side. Only twice, whenever suddenly there is a major news or whenever we cannot close the trade. If you keep the 50% target, your success rate will be more than 85%. If we want to wait until last minute, so that some days, right, for example, Thursday or Wednesday, we made 100, right, exactly wherever we predicted, it exactly pinned at that price. Then you have much more higher chance of 8 out of 2,000, only 1 or 2 points here and there, and then you will keep $1,800. So you have high risk and high reward if you wait until last minute. But if you say that, okay, whenever I make 50%, I'm happy with 50%. I don't want to wait until last minute because especially last 15 minutes, SPX, there'll be a lot of volatility. Suddenly they'll keep moving up, down, up, down. There can be a lot of things. So if you don't want to take a risk, you can set a automatic closing order. You can put a limit order that, okay, whenever I make 1,000 profit, close the trade. Then your success will be above 85%. If you say that I don't want to close at 50%, I want to take a chance, I want to take risk, I want to wait until last minute, then you will make nearly 75 to 80% of the time. You will make money with this strategy. So again, this is strategy two. The first strategy is where you don't need to have your own account, you don't need to have a big right, you don't need to have huge money. Here also you don't need huge money, but here you need minimum 3,000, 4,000. There, if you have 100 to $100, that is good enough. Here you need to have 3,000, 4,000 minimum in your account, where you only focus on either SPX. If you want XSP, you need 300, $400. So you take a iron fly strategy where if the indicator says sell, we'll sell at the money call, at the money put, and whenever it meets 50% target, you close the trade. That is low risk strategy. If you don't want to take any risk, that is the best thing. Or if it says, okay, go long, buy iron fly, then you buy in the money call, in the money put, you go Above 30 points, you sell a out of the money call, out of the money put. Whenever you make 50% profit, you can close the automatic trade. If you want to take more risk, you trim minimum 80% positions whenever you make 50%, and then keep one contract or two contracts until the end of the day. So this strategy is also having nearly 80% success on average. Entire September, we made 85-90% success with this strategy. So all you need is practice these two strategies. One is with the prop firms, trading only between 8 p.m. to 9 p.m. or trading only between 6 a.m. to 7 a.m. Central. That is one strategy where you can make 300 to 400 in each prop account every day. Then you can scale up as you gain more and more confidence, more and more experience. You can do that. Or the second strategy is where you have your brokerage account in Think or Swim, IBK or Tradier, whichever you want, and you just do a iron fly around 9 o'clock, 9:15. You see like okay, if the indicator is telling sell, you sell the iron fly and you collect the premiums. If it's saying buy, then you buy the iron fly. That means you are buying in the money call, in the money put, and selling out of the money call, out of the money put. And then you do have a 50% minimum, 4 out of 5 contracts you take profit whenever you meet 50%. The remaining you can keep it until end of the day. So if we use these two strategies, then we don't need to worry about immigration rules, job loss, or anything. So just your one strategy, 1 week of practice. One is you can do out of your trading hours, right? Outside your job hours. One is you trade around 9 o'clock, 9:15, and you just put a limit order, right? Tomorrow, I'll show you how to do it. And then you can let it, you don't need to even keep watching the charts. Whenever you hit the target, it will automatically hit it. So only because you have a that black swan event risk, sudden news risk, you don't want to go big on any day, right? Because 3 4 days we may make nice profit. Fifth day suddenly there might be a sudden news during the day, and suddenly market may go so much high, so much down. So if you are spending only 3,000 every day, then 8 out of 10 times you will make profits. 1 or 2 times you have that $1,000 risk. So if you are making thousand on 8 days, 2 days you are losing thousand, or 8 days you made 500, 500, 500. 2 days you are losing, still losing thousand. Still at the end of 2 weeks you are at a 2,000 profit. So that's what. Only thing is, after 2 3 days you made nice gains. Don't increase it to 10 contracts from 5. Suddenly that day you lose, then you lost all your profits. So maintain, if you are trading with two contracts, only trade with two contracts all these 2 weeks. Then at the end of 2 weeks, you see that you are profitable. But suddenly after 2 3 days, you made some 500, then suddenly you go up big. That day suddenly some news comes, market either drops so much, market goes so much high. That is where you have a risk. So that's where if you use a consistent position size with the iron fly strategy, the theta decay, imply, IV crush, all those things will be at your advantage. Market stays choppy, you'll make money. Goes little bit up or little bit down, you'll make money. Only you should not have so much bigger. So that's where we wait until 9, 9:05, 9:15, and then we take the trade. Once the trend gets settled, then we enter the trade, and then again, because market makers will come back after 1:30. Before that, if we can trim some positions, then our risk is minimal. Sometimes, yeah, right, our grid kicks in. Right, on Friday also, I thought because it is a third Friday, generally market makers will take the market up again, bring the market down. So we did not close the trades, or we had to take a loss on this Friday. But most of the 9 out of 10 times we made profits with this strategy. Even that right on the Friday also we made nice profits when we took the iron fly. There was a huge drop. Right, let me show you with trading view. You'll understand better. So we got a sell 2xi. That means if you every day you take one contract, you can take two contracts. So it was around 66.52. right? If you collect premiums around this time, you will collect nearly 2000 on a 30 point spread. That means as long as it stays between 66.71 and 66.31, you will be in nice profit. So there was a huge drop. Once it gave the signal, it made nearly 70-80% profit. So if you would have booked the 50%, if you would have booked 80% of the contract, then you are nearly making nice profits. So it dropped so much, and then again it bounced back. So if you would have entered this 50 and collected 2000 around that time, at the end of the day, it stayed below 70, 66, 70. That means you would have made nice profits if we'd have entered that 66.50 put and collected around $2,000 at that time. So nearly all other days, right, we got a sell, price came nearly close to that price. So it was nearly 80-90% profit we made on a Thursday. Again, we got a sell iron fly. Again, price came down, went up, again came down. So we made nearly 80-90% profits. Again, we go, so it was very choppy. If whenever it is a choppy day, it is much better because as long as it stays within that 30-point range, right, you are selling here. So it can go up 30 points, it can go down 30 points. You will be in profits. If it is closes somewhere where you are taking a spread, then you have much more advantage. So as long as right here also it was just moving within the 20-30 point range. So we sold and we made profits. So here also it was just within the 20-30 point range. We sold and we made nice profits. So here sell iron fly on the current sell. That means if this is a green, then you will wait until the red signal. So whenever you get the next sell, if you are already on a sell, you will take it. Otherwise, you will wait until the sell signal. Then you take here. And then if price is staying around 20-30 point range from that, you will make nice profits. So here you got a sell 2x iron fly on current sell. You sell here and then price closes around the 20-30 point range from that, you will make nice profits. Like that. So whenever it says sell, whenever it says buy on the current buy, that means if it is in a buy signal, you can buy it. If you have a if it says sell, that is more. If you do sell, you have more advantage because when you are buying, you are more like a buyer. You are paying some money to buy the contract. When you are selling, even if it stays choppy or if it goes up or down, so majority of the time you get a sell signal. If you get a sell signal, 8 or 9 out of 10 times we can make profits. So every day indicator gives a signal that you can sell or you can buy. Based on that, we take a trade. And if you put a 50% target, then nearly 85% of the time we'll make profits. If you wait until last minute, you have 75% chance to make profit. So the indicator will tell you what to do, and based on that, we can. It will also tell you whether iron condor is better, or iron fly is better, or a bull put is better, bear call is better, all those things. But generally, the iron fly strategy is low. That means your risk reward are nearly 1:1, or your reward is more than. If you risk $1,000, you can make anywhere from 1,000 to $3,000. Your maximum risk is 1,000 per contract. Your reward can be anywhere from 1,000 to 3,000. If you put a 50% target, so price if it goes down, that is much better. If it stays choppy, that is much better. Or if it goes little bit up, 5-10 points up, that is much better. Only if it goes 30-40 points up from that point, that is where you have a little risk. So most of the time, sell 2x iron fly. So you will wait until here, you sell it. Then if it is staying in this range the entire day, then you have 90% chance you can keep 90% of the profits. That means on one $3,000 contract, you can keep nearly 2,000, 2,500. Or minimum is if it drops, you are taking it a sell signal. Whenever it drops, you make nearly 50% profit because you are more a seller. You sold a in the money call, in the money put. Whenever there is a nice drop, you trim 80% and keep one contract until last minute. If it drops exactly at around that price, then you can make more profits on the remaining. So that's what we do in this iron fly strategy, where whenever you get a sell iron fly on the, if already you are on a sell, you can immediately sell at that price. Or if it is going up, you wait for the sell signal, you take the trade, and if price closes around the same price, or whenever it makes 50%, you trim 80%. You can put a limit order to close 80%, right? If you are doing, if you are selling five contracts, let us say you have a $15,000 account, you sell five contracts because you need around $3,000 for each contract. That means whenever you make $7,500 profit, you can close the trade. Or you can say that, okay, close four out of five contracts, so that only one on one contract you are taking a risk. In the last minute, even if there is sudden up and down or something, you already took majority of the profits. Only one trade you are holding it, taking a bigger risk. If it loses, you will lose some of your profit. If it makes gains, you will make 100% on that, or 80-90% on it. So that is the strategy which, right, I'm going to give you 1 week access for the channel. You can watch for the next 1 week. You can do it on a paper account, or you can do with XSP. And once you see after 1 week, you see that, oh, this is working good. Then then you can gain confidence and you can confidently take from the coming week. So any questions on this? So in iron fly, whenever you sell, you are collecting the premiums. You sell the in the money call, in the money put. So if SPX is around this price, right? So around 66.53, when it was around this price, you collect nearly $2,000 on a 30-point spread. That means if SPX is staying around this price, 66.55, by end of the day, you will make huge profits. If it's staying within 10 point, 15 point range from this price, you will still make nice profits. If it is down, you will make profit. If it is up, you will make profit. If it is exactly stays here, that is much better. Only if it goes so much up or so much down, that is where you lose. Yeah, in iron fly strategy, you have all the four. You sell a call, sell a put at the price, at the right. For example, 66.55, you sell a call, you sell a put. Go 30 points down, and you buy a out of the money put. You go 30 points up, you do out of the money call. So you are selling a call and put, you are buying a call and put as a protection. Suddenly, if there is some news, so if you are collecting 2,000, then your maximum risk is 1,000. But if you are doing it last minute, right? If you do around 9 o'clock, you collect nearly $2,000 on a spread. If you are doing somewhere around 132, you may not exactly collect that money. You may collect only $1,000 because you have a lot of theta decay value, time value. You collect more in the morning around 9 o'clock. That is where you want to enter the trade, so that on a 30-point spread, your investment is 3,000. Your risk is maximum $1,000 because either price will stay up or down. So on either bull put or bear call, you'll make profits. Right? Basically, you are selling this call and buying this call. That means that is a bear call. You are selling a put and buying a put. So you have a combination of a bull put and bear call. So definitely price either will stay here, or if it stays up, then you will make profit on this bear call. If it stays down, you will make profit on the bull put. So one side, right, out of the $2,000, $1,000 is guaranteed. Only the remaining 1,000, if it stays exactly at middle, you can keep all 2,000 collected. If it stays 10 points up or 10 points down, you can keep $1,000 profit. If it stays 15 point up or 15 point down, you can keep $500. If it stays 20 points up or 20 points down, it is break even. If it goes above 25, 20 points or 25 points, right, until the 20 to 30 is the risk, or 20 to 30 in the bottom is the risk. Even if it goes above 30, you already have a call. So that will help you. If it goes below 30, you have a put as a hedge. That will help you. So as long as it stays in the 20-point range from this, you will be right. So if you did 66.50, if it goes until 66.70, you are at low risk. If it goes until 66.30, you are at low risk. If it drops below 66.30 or if it goes above 66.70, that is where you have a risk. But if it stays in a choppy zone, in a range, if it, right, nearly all this time it was very, very choppy. So we thought it may continue or it may drop because of Friday it moved that much big. We anticipated there might be a drop on Friday. All the other days it went up, it did a nice drop, we made 90% profit. Before day also it did the same thing. So on Friday also we expected there might be, because of the third Friday, there might be, because they brought it down, took it all the way up, then it consolidated for nearly, it was in nice profits. Both iron flies we took, they were in nice profits here, but suddenly after that 130, 140, suddenly market bounced. So that is where we had. So, but yeah, you are getting it right. So if it stays choppy, that is what we want, 100% profit. If it goes 5 points up, 5 points down from this price, still nearly 80% profit. If it goes 10 points up, 10 points down, nearly you will make 60% profit. If it goes 15 points up, 15 points down, you will make nearly 30% profit. If it goes 20 points down, 20 points up, that is nearly break even. Only if it goes so much high or so much down, that right above 20 and below 30, you have a risk. Above 20 and below 30, you have a risk of $1,000 loss. But if it is staying within that 20-point range, you have a major chance to make money. So when you are doing all those things, so that's why they are giving you, for a 30-point spread, you are making $3,000, right? For a 30-point spread, generally you should make 3,000. But because you are also buying a call, buying a put as a protection, you are giving that $1,000 for your protection, right? As an insurance. Suddenly, if it drops so much, you don't want to, right, be a seller at this price, and if it drops so much, you are at a full risk. That's why you have a hedge here below 30 points. You have a hedge above 30. If it suddenly goes so much high, because you are a seller, you are obligated to sell at that price. So that's why you have a right. If you don't want to take too much risk, you can even do 15-point spread. You go 15 points up, 15 points down. So instead of $2,000 collecting, you may only collect $1,000. So as long as it stays in that 15-point range, you will make profits. If it goes too much above that, again you are buying a call 15 points above, you are buying a put 15 points below. So your risk will become less. So but if your spread is 30 points, that is where you collect nearly $2,000. So on a $2,000, your risk is $1,000. If you make If it closes exactly at that price, you make 2,000 on a 1,000 risk. If it closes 5 points up or 5 points down from the price where you sold, you make nearly 80% of the profit. So that's where generally we take a 30-point spread. That means, so tomorrow, let us say we got a sell. That means around 66.60. Then I will buy 66.90 call. I'll buy 66.30 put. I'll sell a 66.60 call, 66.60 put, and I collect around $2,000. So as long as it stays in this range, we will be profitable. If it goes above that range, so your reward is 2,000, your risk is 1,000. You are risking $1,000 to make 2,000. If you don't want to wait for entire 2,000, you want to only, when you make 1,000, you want to close, your success will be much more. Your chances of success are much more. You can put a order that whenever the spread value becomes, because after some time, right, all the right, for a lot of time it was just consolidating, going up, going down, going up, going down. If you buy a call here, you will lose. But because it was just choppy for nearly 2 hours, it was just moving up and down, up and down, up and down. So if we would have closed the trade somewhere around that 130 time frame, we would have made nice profits, nearly 30% profit. Right? Price did not move at all. It was just going up and down for nearly 2 hours. So if we collected around $1,500 here, we'd have made nearly 300 $400 on the spread. Right? It did not go up, it did not go down, it stayed choppy. But because third Friday we expected some volatility, we expected a drop, but suddenly they took it up. So that's what. If it stays choppy or if it goes little bit down or little bit up, you can make profit. Only if it goes so much high or so much down, that is where you have a risk. So generally, if you trade around 9 o'clock, you can collect more premium because of the theta decay. On a 30-point spread, you can collect around $2,000. So that means your risk is 1,000, your reward is 3,000. If you wait until last minute, if it stays exactly at this price, you will make $2,000 profit. If it goes 10 points up or 10 points down from this price, you will make $1,000 profit. If it goes 15 points up or 15 points down, you will make $500 profit. If it goes 20 points up or 20 points, if it closes at the end of the day 20 points up or 20 points down, you are at break even. Only if it goes above 20 points or below 20 points, that is where from 20 to 30 is our risk zone. So the chances are 8 or 9 out of 10 times it will be within the 20-point zone. One day there can be, yeah, it may stay above that. So that's where you watch for 1 2 weeks, and then you will see that overall, if you use the same size, right, every day you are using one contract. Or if it says, okay, sell 2x, you do two contracts. If it says sell, just to say sell iron fly, you do one contract. If it says sell 2x, you do two contracts. Then at the end of 2 weeks, you see that you will be 80% or above profitable. So that is the strategy two, where we just to take, you don't need to worry about so many other stocks. Just to watch SPX, wait for this 9 o'clock signal. Once we get the signal, you take the trade. Based on that, we can, yeah, we can make nice profits every day with the iron fly strategy. So that's what we do with the strategy two. So strategy one is where you have prop firms. You are not investing your own money. You just pay for the trading view. First 1 month you will get a free access or free trial. Then one week you get the, or minimum you can watch the live sessions for free. So that once you see that every day we are making nice gains between 8 p.m. to 9 p.m., then you once you gain the confidence, you can take it. The second strategy is basically the SPX strategy, iron fly strategy, where we want to take advantage of theta decay and implied volatility based on our indicator, where we are making 80 to 90% success. If you take profits at 50%, our success will be much higher. If you wait until last minute, then you are increasing little risk. If you will make nearly 75% success. So anyone has any questions? Yeah, for strategy two, it is our own money. For strategy one, the prop firms will give you the money. For strategy two, we have to use our own money. Yeah, once you practice, you will gain the confidence. So that's what, right? That's where I told you that it is like, right, one ticker. You are just following SPX, one strategy, iron fly strategy, 1 week of practice. All you need to do is watch for 1 week, practice, and once you gain the confidence, you can start taking the trades in the real account. So these are the two strategies. So once you practice these things, then you don't need to worry, right? If every day you can make 500 to $1,000, whatever happens to the visas or anything, you don't need to worry much. Or even if they ask you to pay 100K, 50K, whatever it is, you will be able to do it. The SPX iron flies are game changing, or I should say life changing. Thank you so much for introducing them to me. So I entered it. I made $555 profit. Thanks for introducing this iron fly strategy. I like SPX iron fly. Started this week, made nice gains. So I made more than $800 for three light evaluation accounts. I also took NDX. So using SPX, you can also do NDX. But NDX will be little more risky compared to SPX. I made around $400 for one contract. So like that, again, there are a lot of success stories, but there is also right that black swan events will be there. So that's why you always go with a small size until you gain confidence. Once you gain confidence, then you right instead of one contract, now you can take two contracts every day. Again, once you gain confidence, the next month you take three contracts. Then next month you take but use a consistent. Don't take one today and immediately jump to two or three tomorrow or day after tomorrow. For 1 month, entirely use one contract every day. The next month, you use two contracts. The third month, you use three contracts. So you are doing the same strategy. Only thing is, as you gain more and more confidence, you will increase your things, right? You will increase the position size, but consistently, so that 8 out of 10 days you will be in the profitable side. Yeah, it is up to you whether you want to use strategy one or you want to use strategy two or you want to do both. It is up to you based on whichever you want. As I said, the cost for both the strategy, right? The first one is maximum $500 per month. First month, if you want to just take one or two accounts. For the second one, it is if you have $5,000, you start with take one contract every day. So even if you lose on the first day, you lose $1,000. On the next day, second day, the second, third day, you can recover it. Or if you start making profits from tomorrow, right? Tomorrow, as I said, mostly it will be chopping a good day to do iron flies. So if you make profit, but keep doing only one contract for minimum 1 month. Then once you gain confidence, increase to two. Then you gain more confidence, increase to three for the third month. Like that, you can keep increasing the size. So tomorrow I'll do a demo on how to open the spread, how to close the spread, how to put a limit orders in the live session. So whoever registered on the Zoom chat, I'll send a Telegram channel, Telegram link. All of them will be part of the Telegram group where I'll do the live session or I'll post the trades. So you can watch for 1 week. And once you gain confidence, once you see that it is making 80-85% success, then you can take a decision to become you can be part of the premium members. So you can set a limit order, right? You can, for example, you are buying a put or you are selling a put, selling a call at the money. You are buying a put, buying a call out of the money. So you can do a reversal and put a limit order. You are collecting, let us say, $20 on a spread. Then whatever you did buy, now you change it to sell, buy to open, or for example, you did sell to open at the money. Sell to open at the money call, sell to open at the money put. Buy to open out of the money call, buy to open out of the money put. Now you have to just do the reversal. Whatever you did sell, you have to say buy to close. Buy to close at the money call, buy to close at the money put. Sell to close out of the money call, sell to close out of the money put. And if you collected 20, now you do $10 for this next closing trade. So whenever automatically it falls to 10, the trade will automatically get closed. You don't need to be before the system. Even though you are in some meetings or something, whenever it stays choppy for 1 hour, 2 hours, automatically the spread value, because it is a zero DTE, right? The theta decay will be very high for the zero DTE. So for 1 hour, if it stays choppy, you will make 30-40% profit. So that's where we wait until that the initial sudden buy sells stops. You take a trade based on the hour indicator. Then for next 1 hour, 2 hours, if it stays choppy, automatically it get closed at 50% profit. So I show it on Yeah, think or swim, and also I'll show it on Tradier. You can, same thing you can do on any platform. Yeah, Ironfly is a low risk strategy. As I said, 8 out of 10 times we'll make profits with the Ironfly strategy. And you have to just, yeah, if you put that 50% limit order, then your risk becomes much low. Yeah, I am using Tradier. I'll show you the Tradier platform tomorrow. I'll also show you Thinkorswim. Both are good. Tradier is, yeah, more easy, but yeah, we'll show you both platforms tomorrow in the live session. And also, I'll show you the, yeah, in the evening time, every day we are making 300, 400. Yeah, we'll also invite all the members for next 1 week for both the strategies so you can watch. And once you gain confidence, you can take the trades. So the live session in the morning will start from around 9:30 Central. And then you just can take a trade and you can put a limit order and you can let it expire if you don't want to wait until last minute. Right? Generally, it is better you put, if you are buying just one contract, you close at 50% limit order. If you are getting more than one, if you are getting five contracts, right, you have a big account, you are okay to take bigger risk. Then you close four contracts at 50% and you just have one contract until end of the day. Yeah, for next 1 week, I'm giving it for free so that you all can test it. Once you gain the confidence, then yeah, you can then become right. If you become option channel is like 199 per month, and yeah, you can do that after. First, you make money, and then once you gain confidence, you can do that later. I'll post the link in that channel, in that new Telegram channel. I'll post the link where you can join, watch it, and you will gain the confidence. Yeah, that's it, everyone. I'll share the recording. You can watch it. So one is the futures trading using prop firms. The second one is the SPX Ironfly strategy. If you use one of these two strategies, then yeah, you don't need to worry about. One is using a consistent position size. Second is following the rules. Third is don't overtrade. Then you don't need to worry about any visa issues or anything because you can do these things from anywhere across the globe. And as you gain more confidence, you can build the position size. That's what our indicator will tell you whether what to do, whether we have to buy iron fly or sell iron fly. Based on that, we take it right. Yeah, whenever you get a long iron fly, you can buy QQQ, you can buy TQQ, you can buy, if it says sell iron fly, you can buy the SQQ stocks, right? If somebody is options buyer, they can use that to buy the stocks, that signal. Yeah, that's it, everyone. So I'll send the invite, I'll send the channel link, and then you all can be part of that. You watch it for 1 week. Once you gain the confidence, then you can decide for the next steps. So generally 8 p.m. to 9 p.m. in the evening CST is for the strategy one. And then generally 9:30 to 10:30 a.m. is for strategy two. We'll do live sessions for 1 week. You watch and uh, and then you can decide after 1 week. Yeah, if you use Tradier, I'll right tomorrow later I'll send a referral link. You will get a pro for free. That means you don't pay high commissions. You will pay only very minimal commissions with the Tradier. Yeah. Again, in the morning time, you don't need to look. So that's what I told you. Just open the trade and you can set a limit order. So you don't even need to keep looking at the charts. Whenever it hits the 50% target, it will automatically close the trade. Yeah, for next 1 week, don't worry about anything. Just watch the trades, understand, build the confidence, and then after that you can think about the fee, all those things. Yeah, tomorrow market will be choppy. Yes, and NQ will be choppy tomorrow. So yeah, the first invite you will get for today evening 8 p.m. CST, 8 p.m. to 9 p.m. Mostly Oracle will be very bullish tomorrow. So we are holding Oracle bull puts. We did a rollover this week. So mostly we'll see a big move on Oracle tomorrow morning. We will get the invite in the new channel. Yeah, Oracle may go to 325 this week. Let me create the link and send it right now. Mm, yeah, you all can join the channel. And once you, for next 1 week, once you see all the results, then you can take a decision in the coming week. Yeah. By everyone. So basically, you'll get the invite for the live sessions. You can watch, and then you can learn and you can build the confidence before you pay anything. Bye everyone. Talk to you in the live session tonight at 8 p.m.